Yo, what's happening? It's your man, OG Bo Beast TV. Come here today, another special video. What's good? What's happening, YouTube? It's your man, OG Bo Beast, and I'm back with another video for you today. So today, I got something special that I want to do. I've been wanting to do more of these videos, but here I am today, so we're going to get it done. Today, I want to talk to you about options contracts. I want to talk to my beginner stock investors about options contracts. What I'm going to do for you today is explain it to you in my own words, all right? And hopefully it'll help somebody understand what an option contract is and how you can potentially make money for the option contract. I make money oftentimes. Sometimes I don't make money, but I understand what I'm doing good enough, and I want to explain it to you for beginners. Now in this video, I'm not going to probably break down every single thing, but I'm going to explain as much as I can and try to make it make sense as much as possible. So make sure you like the video, subscribe to the channel, leave a comment, ask questions. This is for beginners, okay? This is not advice to buy, hold, or sell, and we just going to do it like that. We just going to get right into it, y'all. So options contract. First and foremost, what is an option? All right, so an option contract, by book definition first, is a contract that offers the buyer the right, but not the obligation, to buy a call option or sell a put option. I'm going to explain what those two things are in a second. The underlying asset at a agreed upon price during a certain period of time on a specific date. So when you're talking about an option in the stock market, it's basically a contract for a particular stock. So you don't have to own a stock to do options. I want to say that first and foremost. I'm going to just try to drop basic gems for you to understand. You don't have to own the stock to do options, okay? So with the options contract, I'm gonna keep it simple because it is a lot of variations. I'm going to talk about buying a call and buying a put. A call option is when you expect the price of the stock to go up. A put option is when you expect the price of the stock to go down. Okay? You can make money without owning the stock, more money that you would make if you just own the stock doing options. However, you can lose the money just as fast. All right, another quick nugget before I jump into it is, with options, one of the pros, I guess you could say, is you can't lose more money than you spend on the contract. Now that's good and bad, because if you spend $50 on the contract, you know you can't lose more than 50. But when you start to try to do multiple contracts and you putting up hundreds of dollars, maybe even thousands, you could lose it all as well. But it's a way to mitigate those losses, which we're also going to talk about, which is called a stop loss. All right, so that's the basic I want you to know so far. Options contract, a call is stock going up, a put is the stock price going down. So I'm going to use something that I trade options on pretty much all the time, which is the SPY. All right, the Spider S&P 500 ETF is the SPY. Now, this right here is an ETF stock. We're looking at Robinhood, and this stock basically mirrors the S&P 500. Okay, so you should know that there are some major indices that pretty much keep track of Wall Street and the stock market. You have the Dow Jones, you have the S&P 500, and you have the NASDAQ 100, and you also have the Russell 1000. But right now we're going to focus on the S&P 500, and specifically the S&P 500 ETF and the SPY, because this is a very easy thing to do options on, in my personal opinion. All right, so I have the stock pulled up, and I'm going to just go straight to it, right? So if you're on Robinhood or any platform, you go to the stock. All right, so I'm going to go down. I'm on the stock. You see the price, but I'm going to go down to where you could purchase the stock at, and I'm going to show you this. All right, so this is the section where you could purchase the stock at on Robinhood. You see buy SPY. You got the order type. You got the buy in dollars or shares. Then you got the amount. All right, then you got the order. But we're not doing that. We're not buying the SPY. We're going to go down here to where it says trade SPY options. Okay, so I'm going to click on that. Once I click on that, you're going to see at the top SPY and the price of SPY, and then you're going to see SPY buy call, because I already have it set up to buy call. So this is very important. You want to make sure that you buy a call. You can also sell a call. You could also buy a put, and you could also sell a put. But that's not what we want to do. We want to buy a call. And the reason being is because it's the simplest thing to do. And when you're selling options, that calls for another class basically that I will have to give you, and most people don't have the quantity of shares, especially if you're a beginner, to be trying to sell options. But that's something that you can look into maybe later on down the line. So next to that, you see the expiring date. So this is very big when selling options, all right, or buying a call. So for the SPY, they generally have an expiring contract every single day. So today is the 19th. You could buy a contract for the 20th, the 21st, the 22nd, the 23rd, and so on and so forth, right? A lot of stocks like Apple, for example, or Nvidia, the expiration date goes out a week at a time. So you go out a week at a time. It doesn't expire every single day. This is very important because the expiration date will determine how fast you need to try to get rid of this option and take profit or take the loss if you're not making any money. So with the SPY, I mostly trade 0 day to expiration, which is the same day, or sometime I'll do a couple days out. I currently have some SPY calls for August 22nd, which is 3 days out. So the longer you have the call option date out, the slower it will deteriorate. And we're going to get into that in a second as far as what do I mean by the option contract deteriorating. So 0 day contracts is basically you got to get in and get out. All right, so let's go down to where we at right here. So I want to go down to this middle of this page, and you see the share price. This is the current share price of SPY. This is going to change as the price changes. So right now the price is 559.47. I want you to look at the numbers above this. All right, so you have the strike price, you have break even, to break even, the percent change, and the axe price. So the price that'll be usually above where you see the share price will usually be a dollar amount or so above that. So it's a little bit higher than the actual share price. Anything above this share price, above this line, is called out of the money. Okay, that's because it's going away. It costs more than the actual stock is worth right now. And then anything under this is called in the money because it's the same price or less than the option. So in this case, remember I said you want to buy a call, and a call is for the stock price to go up. So in this case, if the share price is $5.59 and you want to buy a call, right, you are expecting that the price will go up. So a lot of times I may buy right above the current price. So I might buy the 560 or I might buy the 565. Now, if you look below to the 559 and the 558, I want you to notice how the price, right over here, the ask price, this is the current price of the contract, is more when you go in the money. And what I'm going to do is I'm going to go to the next day. I'm going to go to the 20th because today is over with. And you see those prices are a little bit, they're pretty much dead at this point. All right, so we're going to go to for tomorrow. Okay, so that makes more sense. Okay, so let's just look at this. The 560 contract. All right, so each of these little blocks where it's highlighting at is the contract. So a SPY call 560 contract is the strike price. And again, that's just basically the name or the title of that specific contract. The 560 SPY call with a August 20th expiration date. Okay, so the break-even price is 560.74. So that's basically saying that if the SPY gets to that point, it's broken even from where you bought the stock option at. All right, and then it'll be in the money. All right, and then to break even, you need a 25% uptick in that share price, and then it's been a 252% change in the last day or so. That's what that means, and which is 53 cents. But I want to get over here to where you see this green $sign 0.74. So this is the actual price of the contract. Okay, so when you see 0.74, which basically looks like 74 cents, just know when you do options, you times that number by 100 contracts, or by 100 shares. I'm sorry. So one contract times 100 shares. So that 74 cents is actually $74. All right, it's actually $74. And then the first contract that's in the money under the share price, which is the 559 call option, it's $124. You see $1.24, but it's really $124. So what that means is it's going to cost you $74 to be able to purchase this contract. Now, when this is going on, options is only open while the market is open from 9:30 to 4 Eastern Standard Time. While this is going on, this strike or this ask price is going to fluctuate. All right, so this is a very important key to options. You want to get in the contract at the right time, right? And that's going to call for, again, understanding the stock, being able to read the charts, and we'll get into all of that later. But I just want you to know this 74 could go down to 64, or it could go up to 84. Where you buy this at matters, because if you buy it at 74 and it goes up to 94, that's $20. That's a $20 positive that you have made. Now, if you buy multiple contracts, say you bought 5 of these contracts at $74 and it went up to 94 cents or $94, that's $20 per contract. You bought 5, that's $100 you can make. And things like this can happen quickly sometime in the stock market. But at the same time, it could also drop very quickly, and that $74 you spend could start to deteriorate and turn into less money. So when you look at this portion, just know that all of these numbers on the right hand side represent the price of the contract. Now, you scroll up a little bit out of the money and you see that the prices start to get real low, 001, 004 cent, and then when you go under it in the money, you see 124, you see 186, 262. They get more expensive. The reason that is because when you buy options in the money, your chances of making more money faster are a lot higher. Well, how do I know that? I'm about to show you. So we're going to pick this 560 contract that's right above the share price, right? That's $74. I'm going to click on it. When I click on it, some more information is going to come up. So it's going to show you these statistics, right? The bid, right? That's basically saying how many people are trying to buy this option at that price of $73. All right, then you have the mark. That's just another number showing the price of the stock. The high. So this number right here shows that the high for this stock, which is $74, was one time $1 or $100. All right, and then the low was $12. So some people might have got this stock as low as $12. I mean, this option, and it went all the way up to $74. All right, so that's like what, $62. So imagine getting this at the low of $12. Say you bought 10 of them and it went up $64 and it stopped at 74. All right, 64 times 10, that's $640. So again, it's all about when you get into the option as far as how much money you're going to make. All right, you have the volume. So the volume is how many people is actually buying and selling this current option contract, right? This was the case before the market closed. And then you have the open interest, which is actually how many people are actually currently in this this option contract as we speak. All right, and then you have the ask, which technically goes with the bid. So again, $74 is the ask, but a lot of people are bidding 73, meaning that if it comes down to 73, then they'll do an automatic buy on the options contract. You got the previous close, which was $21. So that's from yesterday. And then, you know, the low, and then the applied volatility. This is 8.44%, which is not that bad. When you get to implied volatility that goes above 50 and is getting in the 100% range, then you got to be careful with those. Tesla is a great example of a very volatile stock, meaning it could go up or down very quickly, so you have to be aware. That's one of the reasons why I like the SPY, because it's a little slower, and the further out you get the stock, probably the less, or the option, the less implied volatility that you'll have. Now, I want to explain something very, very important. The Greeks, whenever you buy an option contract and you click into it, you got to look at the Greeks. Okay, so I'm going to explain this and really just a couple of them. So these are the numbers that will kind of give you an idea on how much money you can make and how fast. So very important, the delta. This is one of the main things I look at, because the delta represents how much money that option contract will go up for every dollar that the stock goes up. So let's think about it. This share price on the SPY is $559.35. What I'm saying is, if this option contract goes up to $560.35, that the contract will go up $44 basically. Right? So think about it. If you had one share of SPY and it went from $559 to $560, that's only $1 profit. But if you had this option contract, at least one of them, when it goes up that $1, you're going to make 43, 44 bucks. Now imagine if you have multiple contracts, that'll be 43 bucks times however many contracts you got. So the delta is a very important number. Some options contract will have a very low delta. Those that are out of the money, right? The cheaper contracts. As you go below that stock price and get in the money, those will have a higher delta, because the more money you spend on a contract, the quicker and the more money that you will make. That's a very important key. I want you to understand that. All right. And then these other Greeks mean things, but I'm going to just go to the one that means the most, and that's the theta. So you got to watch the theta, because that is the time decay. So remember, we talked about the expiration date, right? And I told you that with the 0-day expiration date, you got to kind of get in and get out. You can't hold it all day, because the closer that the option contract gets to the expiration date, it'll also start to lose value. And you'll see this theta number change. And it'll change and get lower and lower, and then that's when the option contract will start to be worth nothing. So what I'm saying is, if you wait to the end of the day to trade, to get out of that option, and say maybe that the SPY was going up and up, but you notice that the money that you were trying to make wasn't quite going up, it didn't match, that's because the theta is eating it away. And usually your delta will start to deteriorate as well with the theta. So that's why in a lot of cases, especially for the SPY, when you're new to this, it's better to do a couple days out, if not a week out. Now, the further out you do the contracts, the more the price of the option is going to be. I'm going to give you an example. All right, let's look at this. Let me pull this back up. All right, so look at the 560. This is the expiration date for tomorrow. It's $74, August 20th. Now I'm gonna go to August 27th, 7 days out. That same 560 contract is now $341. Y'all see that right here? $341. Right? Because it knows that it's giving you a lot of time for that share price to get to 560. All right, so just be aware of the expiration date. It's very big when it comes to options contract. Now we're going to go back. All right, so now let's look at the 559. So this option is the first one that's under the share price. It's in the money. It costs $124. All right, we're going to open this one up and look at some of the numbers. All right, so the volume on this one is 66,000. That's pretty good volume. That means a lot of people are doing stuff with this. The open interest is 1,500. That's not so great, but it's some people in it. Implied volatility is about the same. The high for this option was 156. All right, so that's not too high, but the low was 20. So some people bought this at 20 bucks, and it's going all the way up to 156. But I want to take a look at the delta. So let's look at the Greeks and look at this number. So 0.61. So again, let me explain. 61 is the dollar amount. 61 is the dollar amount. So that means $61 will increase on your contract for every dollar that the share price goes up, pending on how late you hold it, because the theta could eat away at that. The theta is a little lower on this because it's a little bit more expensive. All right. So the more you pay for the options contract, the more you risk to lose, but also the better chances you have to make money if the stock goes in your favor. Okay, so if you're betting on it to go up and it goes up and you bought an expensive contract or multiple contracts, chances are you're going to make some money. Okay, so I just wanted to throw that out there. That's a quick explanation, but I wanted to give y'all that. All right, so now, once you do that, this is a very important thing right here. Once you do that, you'll have your options contract rolling. And what I'm going to do for y'all is I'm actually going to go to my contract. I actually got some contracts for August 23rd. I got a 565 out of the money SPY call, right? The SPY has a high recently of about 565. So I got some contracts up to that date. Let me see. Actually, it's the 22nd. I'm going to show you all this. It should show that I have 5 contracts. All right, so look at this right here. You see that little 5 next to the 565? So I have 5 contracts. I bought them at the end of the day because I think tomorrow the SPY is going to continue to boom. Okay? So let's go ahead and look at these. All right, so as y'all can see right here, on the side of my Robinhood account, it shows my options. And it shows a SPY 565 call for 30 cents, or basically $30. And it shows I have a 8/22 expiration date, and I have 5 contracts that I bought for 30 bucks. So I'm going to click on that, y'all. I'm going to click on that. And this is how it looks for options contracts. So it shows all that information. It shows the current price of SPY, shows which call, and it shows how much my contracts are worth. So my contracts are worth 30 bucks. And then you can also see basically the chart lines for this option. It's fluctuated. It was down here at 10 a.m. It was 9 cents, and then it came all the way up to 37 cents, right? So if I had bought this at 10 a.m. and been thinking smart, I could have got this for 9 cents, and I would have already been up for the day. All right, but I bought this at the end of the day, and it doesn't expire for a couple days because I think that the SPY is going to continue to grow. All right, so let's scroll down and look at some of these stats. So currently, all of my 5 contracts for 30 bucks are worth obviously 150 bucks. All right, I'm actually down 6% or 11 bucks because I bought the contracts at $32. Right, I bought them at $32, and right before the market closed, it dipped down a little bit. And actually, it's already back up because the stock price of the SPY went up after hours. All right, but you see the expiration date at 8/22. The average cost of 32 cents. 565 is my break even. So SPY has to pump tomorrow for me to make some money. I have 5 contracts and I bought them today. However, this is what I want you to know. Tomorrow, when the market opens, this is what I'm going to do. I'm going to come over here, right? And this is how you sell your contracts. All right. So what you do is you go to the portion like you were selling the stock, and you're going to click on sell to close. All right. And you'll be able to put in the number of contracts. So I can put in 5 contracts, 1 contract, however many I want to sell. All right. But what I'm going to do tomorrow is I'm going to do a stop limit order on my contracts. This is very key. I need y'all to pay attention to this. So when it comes time to sell the contracts, right? Let's just say the market opened up tomorrow and the SPY runs, and then all of my $30 contracts, say they go to 40 bucks. So now 4 times 5 is 200 bucks. So now I'd be up about 40 or 50 bucks. What I can do is I can do a stop limit sell, where I can plug in at which point I want my options contracts to sell. So I can do that, say at 35, sell all 5 contracts, and if it drops back down to 35 and sells, I would have made some money, right? That way I don't have to sit there and watch the stock all day. On the other hand, that prevents me from losing money, because what if it drops under the 30 and goes to 25 and 20? Now I'm losing money that I put up for the options contract. So a stop limit, a stop loss, a stop limit order is very, very important, especially for beginners. I want to see you make money, but if you're going to lose, you have the ability to limit that loss. Now, here's the pros of that stop loss as well. You can change it as the stock goes up. So I said if the stock got to 40, I put a stop loss at 35, and if it came back down, it'll sell, but then I would be in profit. But what if it keeps going? What if it goes to 45 and to 50, to 55 and to 60, and I really start to get in some profit? All you got to do is go back in here in the same way that you made the stop loss order. You can adjust that price. So I can change that 35 cent or $35 up to whatever I want to change it to, as long as it's not more than what the current value of the option is. Right? I do this all the time, and then I let it ride. I miss out on a lot of money, because a lot of times, if I hadn't done the stop loss, it came back down and touched it, sold, but then it went shot straight through the roof. I left a lot of money on the table. But one thing I learned, and I want you to understand, is you can't be greedy when it comes to making money, because you can do this every day. You're not going to get rich quick all in one day. So take your time, set your stop loss, be patient, all right? Make a trade and then go relax. Hang it up for the day. $50 a day, $100 a day is a very easy thing to do once you learn how to master this particular thing with the options. Now, I just talked about call options, but you can do the exact same thing when the stock is going down with selling a put option. You buy it at a certain price with a certain expiration date. You betting that the stock goes down. You buy the contract, the stock goes down, and your contract goes up, and then you sell and take the profit. All right. The biggest thing about options contract is you got to know when to get in, and you got to know when to sell. Now, when it comes to getting in, that's a whole nother class, because now we got to start talking about looking at the charts. All right, looking at the charts, looking at the volume, looking at the price action, following the trend. But it's not as hard as it may sound. It just takes some understanding and some research. All right, and one day we're going to get to that. You're going to get to that. Knowing that the stock came down and hit support, and that's the time to jump in that contract, because once it hits support and it doesn't go through support, meaning a certain level on the stock chart, when it comes down, it's going to go back up. That's just the way it goes. Once it gets to a certain point, all the people that were selling it going to stop, and then the people that want to buy it at that point are going to start buying it, and that's going to ride the price up. So that's when you want to buy a call option, when it's at that level of support. And the opposite is for puts. You want to buy a put option when it's at resistance. Resistance is when the stock goes up and then it just kind of stops. It always stops, right? It's resistance, because now people that were buying are stopping and people are selling it because it got so high. So once you learn how to play support and resistance, you can make money all day. You can limit your losses with the use of a stop loss. All right. So I know this was a lot of information. I just wanted to take y'all through it. I know I probably missed a bunch of stuff, but I will fill in the gaps. So please leave a message down below. Leave a comment. Like the video. Share the video. Subscribe to the channel. And I'm going to continue to give y'all this information. So we just went over a quick video. A run through of an options contract using the SPY. You can use whatever stock that allows options. Apple, Microsoft, Google, Tesla, whatever ETF you choose that allows it. But I like the SPY because it's easy to trade, and I watch it every day, and I kind of know the motion. Now, when it comes to knowing the motion, nobody has a crystal ball except for maybe Nancy Pelosi. All right? But paying attention to the news and the things that affect the stock market can also be very helpful when it comes to options and learning when to get in and get out. All right, but starting off, if this helped you out and you want to start off small. Start off with those contracts out of the money, maybe, and then set that stop loss and just see what you can do, right? See what you can do, and you go from there. All right, learn, research, do your own research, watch videos. There's a lot of good information out there. And yeah, this is just a quick video for beginners. Just wanted to hit y'all with something, man. I've been doing real good lately, but I was also doing bad at one point, right? So stop loss discipline is real. The psychology of trading is real. And I'm going to post some of my option wins at the beginning of this video and at the end of this video because I want to show y'all that this is real. I make some money, whether it's 20 bucks, whether it's $100, whatever. All right, money is money, and that's a great feeling to be able to print some money every day off of research and understanding, all right, and off of discipline. So that's it for now, man. Like I said, like the video, subscribe to the channel. It's your man OG Bo Beats, and I'm out. Peace.